Okay, so in this video I'm going to show you guys a simple but yet effective strategy that you can easily apply on your phone. Now some of these things you actually need TradingView for it, so if you don't have TradingView you can easily go to the Play Store or the App Store, type in TradingView and download it. Now I don't know if you guys have heard about the different market sessions, but we're going to be using that specifically on the chart. Now just in case you don't know about it, the different session in the market is the New York session, the London session, the Sydney session and the Tokyo session. Now this different session actually represents different things in the market. Now if you know one thing about session, this is actually where you get the most liquidity in the market, because that's when the currency will actually have lots of volume, or in other words, this is when business activities of a particular country actually begin. Now in many places the business hours is between 9 a.m. to 5 p.m. Now that's the point where the market begins to move better. Now MetaTrader 4 is not actually the best app if you want to know the different sessions in the market, but the way that you can actually get this is by hitting into this section. Now what you have to do is that you have to come to this section right here and go into settings. Now when you get into the settings, you can go to this part that says period separator. Okay, show period separator. So when you hit the show period separator, it kind of gives you like a little bit of when the sessions start. You have to have those sessions at the back of your mind, not like it shows you directly. So now what you have to do is to take this section right here and go over to the chart. So let's go over to the chart, and you can see it actually have these period separators. Now I know some of you guys actually have this on by default but don't know what it means, because MetaTrader 4 doesn't make things easy for you to understand, so you have to actually go ahead and calculate these things out for yourself. Now what this period separator does is that it actually separates the market in different sessions. As you can see, this part represents a session in the market, this part represents a session in the market, this part represents a session in the market. So currently right now it's a little bit rainy outside, but yeah, let's continue with it. So now let me show you guys the best way that you can actually get the different sessions in the market. So what you have to do is that you have to get into TradingView, as you can see right now. So now for you to be able to get this indicator I'm about to show you, what you have to do is that you have to get to this section that says this plus button. So what you have to do is to tap into the plus button, and then you can see this part that says indicator. So what you want to do is tap into the part that says indicator, and to pull up this side you have to go ahead and search in sessions on chart. So I'll go ahead and type that sessions. Okay, sessions on, is it there? Okay, so we can see right here sessions on charts by AU Rocks _ AIF. Now what you need to do is to go ahead and tap into the sessions on chart, and once you've tapped into it, the indicator will be on your chart. Okay, so now once you've already placed in like the sessions indicator on the chart, as you can see it says right here sessions indicator. Now once you've already tapped into it, you can see that it actually have different colors. You can see the yellow color, you can see like the light blue, you can see the red, and you can see the normal color. Now this actually represents different things. Now this yellow part represents the Asian session in the market, the light green represents the London session, and the red part represents the New York session. Yeah, so right now let's dive into the charts. Now one thing I also love to point out is you can see this red part right here and this light green part right here. There's a point in the market where the London and the New York session actually happens at once, and there's a point of the meeting of the Asian session and the London session. Now currently the pair I'm actually using for this example is GBP JPY. The British pound represents the London session and the Japanese yen represents the Asian session. This price numbers is in Japanese yen. For £1 you'll be getting 168 Japanese yen in exchange. Now I want you guys to take a look at this light red color. Now something like this is actually very horrific to trade. Now this light red part actually represents New York session. If you look at the currency pair we're dealing with British pounds, Japanese yen, US dollar is not in the mix. What this means is that for a pair like GBP JPY, we won't actually be seeing much moves during the New York session to actually be within the Asian session and the New York session. So this is the Asian session. You can see how the market is smoothly going in a trend. The market was not moving in a trend in the New York session, as you can see here, but when price gets to the Asian session, as you can see, a trend started. Now same thing that we can see right here in the New York session, there was not a lot of movement that is actually happening, but immediately we enter into the Asian session, we can actually see the momentum in the market. And then still kind of the same thing when we enter into the London session. This sessions indicator does not guarantee a market movement. It can either go up and it can actually go down. It just shows the point of liquidity in the market. Now the question now becomes, how are you going to find out the trend of the market, since you already know when the market is going to be moving and when the market is not going to be moving. Now as you can see right here, there are actually two moving averages, which is the 50 SME and the 20 SME. Can you guys kind of like understand what's going on in the market? Now on the charts, there are actually two moving averages, which is the 50 moving average and the 20 moving averages. Now these two things actually have different things that they do. Now the 50 moving average actually goes ahead to show you the general trend of the market. Now as you can see, we actually had a crossover right here, and if you continue to look down, this is a continuous downtrend. It's not necessarily for when you should take a buy and sell in the market. Now what the 20 moving average actually helps you to do in this case is find out those points of entry. Now with the 20 moving average, you can actually go ahead and take a trade like this. Let's say put price right there, keep our stop loss above, and target when price goes above the moving average, which is this point right here. Now if you guys take a look at this, this is actually of a very good risk to reward ratio. Price goes below the 20 moving average, you actually go ahead and place your stop loss above the 20 moving average, and target the next part where price goes above the moving average. Okay, now let's go for something like this. Now if you look at this point right here, clearly you can see that price is below the moving average. Now if we actually go ahead and do something like this, you can see that all what I said did not really apply to this point in the market. I want to squeeze this out, and I want you guys to be able to notice the difference. So if you've clocked it, make sure you leave a comment down below and let me know. If you see at this point, this is actually the Asian session, and what is this point in the market? This is the New York session. Have you noticed it yet? So what actually happened here is a consolidation happened in the New York session, although at this point you can see there's an overlap within the London and the New York session. The London session at this point is within its ending. Now again, let's look at this point in the market. During the New York session, not a lot was happening here. When we get into the Asian session, this is when we actually start seeing things happen. This white point represents no session in the market, and sometimes market really moves in that point. Now if you take a look at the Asian session, this is actually where momentum starts to kick in the market, and as you can see at this point, price straight up went above the 50 moving average. Now when price gets above the 50 and the 20 moving average, what we're expecting in the market, we're expecting a buy in the market. So that's exactly what happened. Now as you can see, during the London session, we actually have a lot of that momentum start to kick in. During the New York session, we can see exactly what happened here. The consolidation occurred as usual. Now if you guys enjoyed this video, make sure you drop a like, hit the red subscribe button, and I'll see you guys in the next one.